Welcome one, welcome all. This is December 9th, Thursday. I am John Zidar and you're watching On Top and Hot, brought to you by, you got it, PB Alerts. But folks, all those links down in the bottom, they'll take you to PBU, they'll get you to the university. It's not hard to find, just make a left at Albuquerque. That's what Bugs Bunny says. Get in there, get yourself that education. You won't be sorry for it. So I've got a few stocks I want to show you today. I think some of them have some serious potential to give some money. They've been telling us that things are changing and changing good for them. So we need to get on the bandwagon before the bandwagon gets overloaded. So come with me and I'll show you what I found. So this one is Digp, D-I-G-P. This is Digipass Inc. They finished the day at 0.036, about 3.5 cents. They were only up about 6%. This is on the QB market. They're in the middle tier of the OTC, so all of their financials are audited. This is a better company than on the pink, though the pinks can be audited too if they choose to be. Here, you have to be. Let me see, I got a verified profile and a transfer agent, so they look good there. Everything is great. So what exactly is Digipass? Well, they tell us here that Digipass supports the cannabis industry's best practices for reliable testing, education, and training. They're a lab. That's what they are. They're a testing lab, and they're based in Nevada. And there are basically 11 labs in the state of Nevada with 3 million residents, but they get 40 million tourists coming in and out of the state every single year. Different ones. And the recreational cannabis market has been booming, and these companies have been doing lots of business. Now remember, a testing lab tests everything. When the product is growing, meaning the cannabis flower, the buds have to be tested before they can be sold to anybody to make CBD oil or whatever. So they get tested, and that costs $350 in the state of Nevada. Then when they go on to be made into CBD oil, the CBD oil has to be tested. Again, another $350. And if they sell it to a brownie company, well, now the brownies have to be tested to make sure that they're safe before they get to the ultimate consumer. And again, another $350. So they've been doing pretty well doing that in Nevada. But it's time to expand. They've reached a ceiling. And they've been telling everybody that here recently because they just made a deal. So what sort of excitement is wrapped around all this right now? Well, let's take a look. Double. They got twice as much volume today, which there's nothing wrong with. When you look at today's volume, we only had, well, under 10 billion shares the entire day. Folks, that's anorexic. That's dangerously low. The whole market could faint and roll over right now. That's just unbelievably low. So this was good today considering the condition of the market. Now what sort of share structure does she have? Well, now that's kind of interesting. It says that her float is 62 million, but the unrestricted shares is 48 million, and normally that's where your float comes from, is the unrestricted shares. So best we can say here is it's between 48 and 62 million, which that isn't too bad at all. So what sort of financials do they have? Well, as I said, they've pretty much run into a ceiling. They've been in business for 6 years. They're not a startup company. They've been here since all this testing needed to get in line. And well, you can see they're running about $2 million a year. Don't forget those 3 zeros here, right? Those go in the back. But after they have to pay all their fees and licenses and employees, they're left with about $750 million. And you can see they got a little higher than that earlier, but that's about where they're at. And that's why they need more revenues. And the only way you're going to do that is to find another market, which is what they are looking at and actually already done. Matter of fact, let's go over there now and we'll take a look at the news. The company is expanding. They have already picked up a company here in Steep Hill, California. Now, California is the motherlode of cannabis testing. They've got recreational, they got medical, and it all has to be tested. As I said, all these different products, all these different stages. And the cost of testing there is $650, so it's twice as much. Now, here's the thing. They've only got 35 labs, and they need over 100 of them. The state of California says that we need 100 labs, and they've got 5,000 customers. Nevada, with 11 labs, has got 150 customers. You can see the ratio difference here. So there is a lot of potential growth, not only for more customers, but bigger payouts down in California. They also want to extend over to Arizona, which just makes sense for them, to the left and to the right of where they're at in Nevada. But they want to get into Oklahoma. Early starter, early movers, these first states all need labs. Every single state is going to need labs. That's a known fact. And they are doing that. And they want to expand. They have now become an MSO lab. I don't know how many of those we have. Because the fact is, the rules apply to them too. They can only do business with Nevadians when they're in Nevada. Is that how you say that? And in California, they can only test products from California, since these things can't go over borders yet. Once it does, the laws change and things can go across borders. That's going to make business even better. The other state they're really eyeballing right now is Florida. Now, Florida is strictly medicinal. Now, they've only got half as many residents as California. They've got 40 million. Florida's got 20 million. But Florida's got the biggest medical cannabis patient record that is out there. I think they've got just under 600,000 medical patients. So there is room down there to grow. They don't have enough labs. I'm not quite sure how many labs they have. 7, I think it is. And when they go recreational, it's going to get even bigger. There's going to be products that are going to have to be tested then. So that is what this is all about. This is on the 7th, so we're looking at 2 days ago this news came out. Matter of fact, I've got this over here, I do believe already highlighted for us. Make it easy. Digipass takes over management and signs letter of intent to acquire majority control of Steep Hill licensed Northern California lab from Avct Labs. The company announced today that it has signed a letter of intent to acquire a controlling interest in Berkeley, California-based cannabis and hemp testing laboratory from Avct, also on the market. The lab acquisition would immediately make Digipass a multi-state operator and would be the company's first in what it hopes will be a similar future purchase type situation, with acquiring other existing labs and increasing their profitability. The Berkeley lab is fully licensed already in California with state-of-the-art equipment and complete redundancies. Digipass is already managing the lab and under management agreement pending the closing of the transaction. And they expect that to close, I think they said, at January. January is the closing, but they're already got control of it. They're already doing this. The revenues are picking up right now. So that is what this is all about, expansion. They know what they're doing now. They know exactly how things are set up. They have got all the equipment. They now have a second lab. They want to buy 2 and 3 more labs as well. Not just expand out into these other states, but expand into California. They want more business, and business is booming. And as the laws change and the mandates for these tests become standardized, there's going to be a need for organizations that can bring it all together, and they're one of them. I've been invested in this company way back since they started in 2018. Actually, that's when I started looking at them. They were testing hemp and cannabis, so we could determine what could go across the borders, because the cops didn't know the difference and they were confiscating entire loads of it. So that's what you got going on here, is that they are expanding, and it's going to really kick up their revenue. They're going from 150 customers divided amongst 11 labs to 5,000 customers, and probably growing, being divided currently with 35 labs, and they need 100 of them. So the business is definitely there, and the cost is double virtually what it is in Nevada. So they're going to make more money faster. So this is going to really kick up their revenues, and that's what it's all about. And they are now an MSO laboratory, which I'm not sure I've heard of another one. The last piece of news here is basically the same news, but looking at it from Avct's point of view. That lab that they got a hold of is called C3 Labs. And this is looking at it from Avct's point of view. They are selling that lab to Digipass. So let's go take a look at that chart and see what it looks like. So we're taking a look at Digp on TOS. It's a free trading platform you can get if you sign up with TD Ameritrade. No deposit required, no trading is absolute. All you got to do is sign up, that's free. They'll let you use their tools, and that's right there, TOS. So we're looking at Digp on a 6-month, 4-hour chart right now. And she is sloping down. She's had some big bounces in there. A lot of these bounces are about 25% in this price range, 25-30%, most of these average bounces. And we can see she's under the 200 right now. She hit a low bubble here, but then there's been quite a few lows. Actually, that's a new low, right? She had a low here. That's been one she's tagged a couple times and broke. So this was a superior low. That's a real low there. And I'm glad to see it bounced off of this. I am invested in this company, like I said, and I've been waiting for her to start getting some momentum. And this looks like the time it is going to happen. We can see that she's had a steady amount of volume coming through here, but it definitely increased right here in the end. And even though she dipped, the volume was increasing through this point. Curious, very curious. So let's come in on that 5-day, 5-minute look. All right, so we've got, what did we say, about 40 to 60 million in the float. And our jumps here, you can see this is about an average bounce. At this price level, between just under 3 cents to just over 3 cents. What is that, like a 20% bounce? So these are like 20% bounces in 5 minutes. You know, there's nothing wrong with 20%. And when you see it going from here to here, what's that? About 45%. So in just a day, you can make 45%. It bounces down, you get it back. You buy in at these low points. But I don't know how much further she's going to come down. I mean, she's hit this low bubble, and she's got catalysts, she's got news, and they say they're going to be coming out with a news press here to, like, earmark the grand opening of this Berkeley lab. So we expect a bounce out of that. But I'm looking more down the road. The revenues are going to increase at a very strong rate for this company. The business is going to get strong. They just had a conference online, and they tell us that they are prepared to do 100 to 200 a day, but they've got redundancies in place if they have to do more. And when you start multiplying 100 to 200 tests a day at $650 each, it starts to add up to a lot of money. So this company's revenue is going to definitely increase, and I think the news is going to help it, but you want to get in on it before it starts taking off. And you can see she has been on that down run for a while. We started, I'd say her average was right about here, right about there. So you're looking at about 4.5 cents, and she is just, at about 3.5 cents. So we're at about a penny, which is pretty much at the 200. And you'd want to get this before it gets over that 200. So we are a ways down right now. Probably a good opportunity for a small hold right now if this is a company that interests you. If she dips a little more, get yourself a little more at a better price. But don't be afraid to buy more just because she's climbing. Just wait for those bad days when she dips and buy it on the bad days. It's okay to scale up on a long swing or a long hold. Don't buy it all at once and commit yourself. Then you need it to only go one direction. If you're looking to average down, wouldn't be a bad thing for it to dip. You got a little more money to spend on it. Get that price even better. All right, let's go take a look at that next one. Creative Learning Core is what we're looking at now. CLCN finished today at 18 cents, 20% gains. They're on the QB. All their records are audited, verified profile, transfer agent, and independent director. So they're in great shape here. So what exactly does this company do? Well, they are a learning company. They have all these different learning programs. The company sells franchises under the trade name Bricks for Kids, which offer programs designed to teach principles of engineering. Blah, blah, blah. The rest doesn't matter because they're pivoting. That is what they were doing. Let me show you what's going on here, but first let's see what sort of excitement wrapped around the news. Today they did about 500,000 shares. They normally only do 8,000. So you're looking at 50 times 8 is 400. So you're looking at 50 times plus. I ain't doing the math. My brain just 50 times plus. So there is definitely interest in this pivot. People are liking what they're going to do rather than what they were doing. What's their share structure like? Is it worth a good payout? Oh my goodness. Woohoo! Look at that, folks. 6.5 million shares. They've only got 13 million in the outstanding. Wow, another surprise. So we've got a really low float and we've got some high RV, relative volume. So have they been making any money doing what they're doing? Well, sure they have. Yeah, they have actually. They got a few $1,000,000. During the COVID year, they did much better with this kids learning stuff that they were doing, and it's taken a dip now. So they're between $2 and $3 million. And look at that. There's the good thing. Cost of revenue. You see what that cost them to make that money? Zero. Look, when you have a digital product and all you got to do is stream it out there out of your computer, how much does that cost you? That's right. Digital products are the best profit you're going to get next to ice cream. So they had 100% of their revenue is 100% of their profit. That's a good business to be in, but they're letting it go. Oh boy, must be something better that they're doing. Well, let's go over to the news and we'll talk about it. So this news came out today. Creative Learning Corporation enters into share exchange agreement to acquire Drive It Away Inc., forming wholly owned subsidiary, Drive It Away to become the operating business led by Drive It Away management team. We're not just pivoting the business, we're pivoting the management. Big change. Let's go take a look at this. Now, this is a really good piece of news. They got a lot of information here, but the feel I get when I read it is that they're talking about a reverse merger. Now, nobody said that. I don't know why. But when you have two companies come together and the new company becomes the controlling entity, when their business becomes the primary focus, that pretty much sounds like a reverse merger to me. Quacks like a duck, walks like a duck. Voila, I think it's a duck. But you tell me. We'll read here. As a result of the share exchange, DIA, they're talking about the new company, Drive It Away, will become a wholly owned subsidiary of the company. So that sounds kosher, right? But upon the closing of the transaction, the shareholders of Drive It Away Inc. will become the beneficial owners of approximately 85% of the company. They're going to be the controlling holders of it. Furthermore, it goes on to say that Drive It Away, with its revolutionary subscription to purchase technology, which we'll get into here, will become the operating business of the company and will be led by Drive It Away's management team. They also say that they will primarily focus on the automotive mobility technologies and programs. Out with the old, in with the new. All that learning stuff is gone. They expect this to close about January 2022. That is just around the corner. Now, it is not a done deal. It sure sounds like it's a done deal, but it is all happening. It is not closed. And when that press release comes out, this is probably going to bounce. But the excitement is building now, which is why I'm showing it to you. Now, what exactly is the product that they have? It is unique. It is very unique, and more than that, it's helpful. It can help so many Americans in a lot of basic ways, and I think it's going to be successful because it touches on to the needs of the needy, and that's a big deal. So check this out. Our technology and platform is unique in the marketplace, as it enables those that are cash and credit challenged the ability to buy the vehicle of choice from any car dealer chosen in a transparent and easy risk-free subscription way, building credit and equity with every payment. They go on to say, we believe the timing for this is very strategic and perfect, as Drive It Away recently launched a national ownership program for employers to help them relieve their labor shortage issues with a pay-as-you-go vehicle purchase program for their employees. How about that? which will help entry-level employees get to work and enable employers to hire and incentivize new workers in an ESG mission-based way. Drive It Away is also soon to launch a pilot program enabling cash or credit challenged consumers the ability to drive to own EV vehicles. Folks, this is great. You're not only helping people get cars, you're helping them get jobs. Aren't you? I mean, you give a guy a car, it's like teaching him how to fish. You're giving him abilities that he didn't have before. So I really like this. But what's up with all that learning stuff? They were making good money on it, and it was free. They didn't have to pay a penny for any penny they earned. Why would you throw that away? Well, they tell us here, separately, the company has entered into an agreement to sell its current learning business, which consists of 5 wholly owned subsidiaries. They believe that as a private company, so they're not even going to be on the market, it will allow us to become more aggressive in gaining market share, investing in the R&D of new products, and focusing on franchise sales and franchise owners. We will be more agile and effective than we ever have been. Now, I got to be honest, I don't know if there's any retention to the profits of the learning business with this business. When you say you're selling it off, they don't tell us if they've retained any percentages of it. So I don't know. All I know is they're not doing it anymore. It is out the door. They're probably going to change the name, aren't they? Creative Learning just doesn't fit anymore, which means they're probably going to change the ticker, which tells me this was a silent reverse merger. Now, maybe that will be what is in the next press release. Maybe that's when they say those words. I don't know. But there was some activity, and this is what caused it. So let's go take a look at the chart and see what it looks like. CLCN, 6-month, 4-hour. Not a lot of activity, but you got to remember, she's only doing about 8,000 shares a day. But today, she did 500,000. And you should see a bigger blue bump. And we do. That blue bump is way up there compared to here. And it's been thin, off and on. She is trying to get over that 200, and she's tried really hard today. Real hard today. She started this whole run today at 15 cents, got up to 27, just shy of 100%. But she ended up the day at 20%, so she threw away a lot of it. Looks like she ended strong, but that's only because of all that extra volume. That really gave all the technicals a real big inflation. Let's come in here. Let's look at the 1 month. All right, so she is running flat. I mean, she's got some bounce in here. You can't tell how much. So that's like 15 cents to 17 cents. You got 2 cents bounce there. And then you got this huge bounce. Wow. And she's come all the way down. And of course, she's well below her 50% mark. Well below. So do we think she's going to grow? Well, I think this was the news to get interest. Now you've got people watching. We're waiting for that next piece of news. This is what's supposed to happen, and normally you would expect more than 50%. I've got to say that. And that would be somewhere about there. It should be above that. So there's a very good likelihood because this is pretty decent news. I think it's a great program. I think when it catches fire, it is going to catch fire. I think the car dealerships, I mean, I can just see a lot of people getting behind this. So this price probably should push up onto this. That would be my impression. We should get above the 50% mark of that because it is a worthy stock. It does have value, and it's just coming alive right now. So I think people are a bit confused. So I think getting it under that yellow bar right now, and that's just a spitball, I think you're getting a good price here. Watch it for dips. Absolutely watch it for dips. Let's come in on the 5-minute, 5-day. All right, so that was in 10 minutes. I want to see the 1 minute. How did that play out? That was the second minute, folks. Second minute. So the first minute you went from 15 cents to 18 cents. You're looking at it and you say, wow, this thing's flying. You see it at 18 cents, you know you got to throw in your price at least 3 cents. The first minute jumped 3 cents. So you're going to jump in at what, 21 cents. And it hit 22. So you may have caught it. You may have caught it. But you would have had to sell right behind that because this would have been chugging, chugging, chugging up. Remember, this is all in 60 seconds. 60 seconds. And you'd see it going up. And if you got lucky, and you got in at your 21 cents and it's up to here at 24.25, just sell. Just sell. You're at 20% gains. Whenever you see a big surge, go 20%. Just take it. Look, doesn't matter if it keeps going. You got 20%. And I'll guarantee you, more times than not, it falls afterwards than continues. Ta-da! See what I mean? Wham! Came right down and fell very quickly. So these are very impossible plays, but I'm just saying that happened very quickly. There was a lot of excitement, but it didn't hold. You see, it came back to that 50% mark. Yes, it did. And it fell away again. And I expect as the news gets hot again, because they can't put a press release out every day, but they should have one here before January. And it would be good to get in on this before it runs. Now, what was its high price? Let's go back there and check out that high. Oh, well, the high was there. Oh, goodness. Let's go back a year. Now, it really doesn't matter, though, does it? It really doesn't matter because we're looking at the learning company, and that is not the engine that's under the hood anymore. This is an entirely different beast. It's got the same ticker, it's got the same name for now, but it's changed. This silent reverse merger, which I'll bet you is what they put in the PR. I'll bet you we'll watch and see. So this looks to me to be a decent stock. I think it's got potential. I think it's at a decent point to consider an entry purchase. It could go lower, but I get the feeling it's going to come back up here. And once the news hits, and if there's any teasers, if there's any tweets, this could start edging its way up before that press release and then do a punch. And folks, if it punches, get out. Take the punch. Let it come down afterwards. It'll overshoot the mark. Let it come down. But you'll get your rush out of it and the profit. All right, let's go take a look at the next one. This next stock is not on the OTC market. It is on the NASDAQ market, but it is still qualifying as a penny stock. Any stock under $5 is a penny stock, and this is at $1.88. This is AVCT, American Virtual Cloud Technologies, and this company does do what their name says. They are into cloud technology, and we've got no description here, but you'll get a little bit of a better one when we go take a quick look at the financials here in a second. So the company had news today. They sure did. And what sort of volume was there behind this news? Well, normally they do about 500,000 shares a day. Today they did 120 million. Folks, that's 60 times as much volume as normal. That's incredible. So obviously there was some excitement about this news, which is why I'm bringing it to you. I don't much follow clouds, but I got to tell you, cloud is where everything has to be. There's so much information, we can't keep it in computers anymore. We got to put it in the clouds, and the information is growing at such a staggering amount of rate that we need clouds faster than we can make them. Poof, poof, poof. You know what I mean? So what sort of share structure does this company got? They got lots of volume. Well, I went and did some research and I found about 56 million. So we knew it was under 67. That's the outstanding share count. So 50, 55, 56, somewhere in there, which isn't bad. Not bad at all. Now, being a NASDAQ company, we do expect some money. Well, I expect money every year. This year off, year on, year off, year on is kind of unique to me. They got other numbers down here during those years. Interesting. But in either case, they were making good money, right? You got to take those 3 zeros, put them behind there. That's $87 million. Now, of course, it costs them something, but when it's all done and said, they walk away with $27 million in their pockets, dragging it down the streets. So they've got good revenues. And their disclosures, I did take a look at these. These are basically disclosures about the news. Yeah, they actually put out disclosures. I'll show them to you just so you can see. They tell us right down here that it's a press release. So that's what they're telling us. Now we're just taking a quick look at this 10Q. This is their most recent quarterly financial report. And we're not even here for the financials, but we'll take a peek since we're here. This is in the thousands. So we have to put those 3 zeros behind the numbers here. And this is their last quarter's assets. They had a total of 124 million. And their liabilities are only 64 million. So that's half. They're doing quite well. When you see that last year they had 153 million and 105 million of that was liabilities. So they're making headway. They're putting the debt down and they're spreading that gap in profit. Speaking of profit, they also made $7 million this last quarter. Last year they made, what was it, 27 million. So they are progressing. They're making money. Now, what I want to show you here is that they made 2 deals last year, 2 acquisitions, one in April, one in December, for companies that help them do what they're already doing. One was called Computex and one is called Candy. And both have their specialties and are very good at them. And they're just too complicated to go into. But what I want to point out is Candy. Candy is hitting a home run for the company right now. It says here that Candy is a provider of cloud-based enterprise services and globally deploys a white label carrier-grade cloud-based platform. What that means is white label, it's other people can sell it. It can be resold and reused so that more and more people can use it. It can grow exponentially. They have it for the 2 different types of services out there. I'm not going to go through all the names. And the contact center, they're covering all their bases and it's very highly scalable. So that is what is going on right now. And this is the news that got the stock moving based on that Candy acquisition. Avct Technologies announces significant projected revenues growth of Candy, its cloud communications platform. Now this came out yesterday. American Virtual Cloud Technologies today announced that it projects revenues of Candy business unit to grow from 14 million last year to 18 million this year. It's only 4 million to 37 million next year. That's more than 100% gains, folks. That's double the money, and that always catches people's attention. The significant projected growth is driven by a 505% year-over-year subscriber growth from January of 2019. Avct Technologies delivers a full suite of cloud-based unified communications as a service. That's where the UCaaS comes from. Unified Communications as a Service. Capabilities to its cloud customers through its carrier-grade Candy Business Solutions Cloud. And they've got lots of different clouds there. The projected annual growth of the Candy business unit comes as a result of deeper penetration with existing service providers and enterprise customers, including IBM, AT&T, and how do you pronounce that? Estela, and expansion into new customer relationships. IBM, AT&T, these companies can resell this product because it's white label, and that gives them deeper penetration. By getting big companies into the business, they can build their business by expanding the cloud out there for this company. That's how you grow fast. Avct Technologies is positioned to gain market share as a premier white label cloud communications provider. Do you know how Amazon got so big? White label. White label means that you make a product with nobody's name on it, and you can put any name on it you want. So Tom, Fred, and Joe all go and buy it and put their names on it and sell it on Amazon. This is Joe's brand, Tom's brand, and Fred's brand. Looks exactly the same, don't it? They are. But that's what comes with white label, and people can resell them. So this is a huge market. Now, they tell you here that it comes from their 505% year-over-year growth. Well, look at this chart. This goes all the way back to the fourth quarter of 2018. This is their customer base, starting at 50,000 and going up to almost 500,000 customers. Look at that growth. Exponential. It's just getting bigger and bigger and bigger. Now compare that with this. Look at that. That is a 6-month, 4-hour chart. Wrong. What's wrong with that picture, right? So this is definitely going to be undervalued and noticed for being undervalued, and most likely is going to do a reversal. And that's what we're looking at here, is a reversal. This is just some of the companies that they're working with right now. They say down here that Candy services are deployed in more than 13,000 businesses via their partners across enterprise verticals, which is what I'm telling you. They have companies like AT&T, BT, Digital, Allstate, and then these companies have other companies that work under them, and they are pushing the cloud. So by having these big companies, it grows. It's like a network. If you've ever done Amway, you know exactly what I'm talking about. And that's what you got going on here, is they just keep perpetuating the cloud through other businesses who move it to help their own business along. It's just in everybody's best interest to use it. So let's go take a look at that chart and see what this reversal has to give. We are looking at the reversal for AVCT. Can you see it down there? That hook right there, whammy. She came through the 200, didn't she? She broke it up here 6 months ago and then abandoned it. Thought she could come back home and was not allowed. Just kept pushing away and pushing away further and further. And don't worry about that low bubble. These are all low bubbles falling, right? Unless she'd ever dipped below here before, but she never did. So this low bubble is really insignificant. The fact is that things starting to change now. We don't just have one day. We've got 3 days. Now, I'm not going to call that a trend, but definitely the volume has increased. Let me back that up. Let's see if there's any volume close. There's no volume even close. So, right there. Boop. We got one blip on the dot right there. But all of this is most recent because things are changing. Candy is getting into action and word is out. And the whole point is that they have projected they're going to have bigger revenues. That's really what this is all about. And the white label is a big deal. That is, it's like having hundreds of people work for you for free. It's a great way to get your company to grow. So we can see there was a humongous amount of volume today. Huge, all based on that news. And look, folks, we're looking at it right now. Look at it move. Bing, bing, bing. As we're talking, we're losing money. I got to get this out faster. Now, you can buy this stock after market hours. It's on the NASDAQ. It is available to buy. All you got to do is put in your order with extended hours, EXT, and you can buy this stock. So it closed the day down here at $1.81. It's still running, and it's at 233, 234. It's still running. It's broke to 200 and is going for it. I want to come in on that 5-minute, 5-day. So 2 days ago, after market, I mean, it looks like it started just before the day closed, something popped. Piece of news probably, and it ran hard. Lots of volume after market. You don't normally see that kind of volume after market. She came down sideways, but held it. Let's see what we got there. And looks like it was a waste of time, right? Everybody says false alarm, but here it comes again. After market. Pre-market kicked it up some more, and she just has been stair-stepping all day, and she is still running right now, folks. What can I tell you? What can I tell you? She looks like she's going to continue running, right? If I'm supposed to tell you that's going to fall, she's bouncing in front of our eyes as we discuss it. So I really like this stock. I think the news is going to help it. Their quarterly report is going to help it. I think you need to get in on this before it moves too far away. What was her high? All the way back 6 months ago. We were at $9. We're at $2.37. It was at $2.34 just a bit ago. Let's see what it was a year ago. And this is before they had candy. This is back when they were doing old school stuff, whatever that was. So $9.62 is their high over the year. And they were at 84 cents 2 days ago, 3 days ago. And now they're at, I got to come back in. What was it, 237? 243. Holy cow, folks. It's moving so bloody fast. Well, okay. I'm going to shut this one down, and we're going to call this a night. I was going to do another one, but you know what? I want you folks to see this one. So the other one can wait till later. So, there you go. All right, I don't know. This is going to take still 30 minutes to upload and 30 minutes to convert. I hope you guys get a chance to get that stock. You see it moving? I had a feeling about this one. And the other two, I'm invested in them too, not just financially. I mean, I believe in them. I think they've got something, and I really like that NASDAQ stock. I like the one that's going to help people get cars. That just seems to be hitting Americans where they want to be hit. That's something good, and I think the company could get a real good reputation for that. And who knows, maybe like the other company, they can get car companies and other companies to start, I don't know, pushing it, putting it out there. So I'm done for the night. Hopefully you guys can get into that last stock before it goes to $5, for goodness sake. And I will see you tomorrow. Remember, folks, jump into this information every day. Keep up with it, because the more DD you do, the more you know. And the more you know, the more you grow. See you, folks.